Hello, ladies and gentlemen. Welcome back to the X-Force Global channel. Thank you very much for joining me here today. Hope you're doing fantastic. Today, we're going to be diving into the latest Bitcoin developments on the macro side of things. I think it's a good time to discuss and explore how we can put our current analysis into the macro timeframes in terms of the price action. Again, I must cater to both not only the bulls, but as well the bears. So I hope my analysis shows a neutral approach to help build your own thesis on the bearish or bullish outcome. Nevertheless, I do give my personal sentiment. Nothing is financial advice, so please do take that with the word of caution. Now, let's start off with our first scenario. As we have been discussing two different or three different possibilities of the macro or the medium to the shorter time frames, we have discussed the idea of the diagonal or the combination idea. Now, how can that fit into the current time frame for the larger time frames? We have to make a few adjustments here and there, but for now, everything is remaining intact as long as we do have this 1-2 being here as our main solidified bottom. So if we have this as our wave 1, I don't think there could be any arguments being made for this wave 1. We have a clear 5-wave move up into this, and we can see that that has created a sideways movement for this 1-2 possibility. I don't think there are any arguments that we can be making for this idea. I think that this is either going to be some kind of hybrid idea of a possible AB, WX, or even a 1-2. Now, what can we do for this move here? Now, this is going to be deemed as a completed correction based on this current data that I have. Now, we originally anticipated this being a possible 1-2, 1-2, or 1-2, which is still ideally in play. However, due to the time of correction that we're witnessing, I do believe that there is a possibility that this now has to be adjusted as a possible wave 3 top. Now, there's nothing to worry about that adjustment due to the fact that we can use our Elliott wave channeling technique that we take from the origin of wave 1 to the assumed top of wave 3, and then we just connect it to the origin of wave 2. Now, this idea is that wave 4 is going to correct anywhere below this current median channel of this middle line. What we can say that is anywhere from these levels, or more likely as possible as a combination idea, have it correct right into the bottom of that channeling idea and have our wave 5 end anywhere above this median channel, and then have that wave 5 complete either even at the top of this level, that which is around the $100,000 level, more or less. So in this idea, what we're going to be doing is utilizing that diagonal idea. Now, this would be the most best outcome in terms of what we can do of keeping a best look. Now, this idea is that we're going to be completing this 5-wave impulse, and I'm glad that we're not working with too many nested structures here. What I'm doing here is simplifying the process here for everyone, and the fact that we don't want to be assuming, beyond $100,000 or $200,000 levels, because we just simply do not know when we are in price discovery. So with that being in mind, we can say that this 1-2 is in play, this 1-3-4 is in play, either as a diagonal or combo idea, have that wave 5, and then have that larger pullback. This is where I will most definitely be switching my bias, because this move here is too large of a pullback that we don't want to be missing this opportunity in terms of that pullback. We can be trading everything, especially these action area waves. They're the most profitable, especially on these wave A's and wave C's, if you're able to identify that this is going to be a 3-wave move up for this ABC or wave B. Then we can move down and we can start talking about what kind of pullback we're going to be having. But until then, we don't really know what's going to be happening. However, this 1, 2, 3, 4, 5 looks like it's the more likely scenario. So utilizing that diagonal idea that we've been talking about in the past videos, if you haven't been watching those videos, please do go back on my latest analysis, one video before this, to see how we can see the shorter to the medium time frames. So if we're going to be working with that diagonal idea, again, we're working in an ABC for this wave 4 and then move up. Now, the biggest thing here that I'm kind of taking out of consideration is the idea of alternation, where wave 1 and 2 is currently a sideways move, and then we're expecting a sharp wave 3, 4 for this alternation idea. Now, the idea of alternation is the assumption that we're going to have either a sideways 1, 2, which we do have right now, and then we would be expecting a sharp wave 3, 4. We've been expecting this too long. We don't want to be expecting it to right now. I think it's too early to even call, even at this level of stage. It's just because we're constantly adjusting as time goes on. We can always adjust a larger picture once we do have a pretty clear 3, 4, 5. Now, this is just an observation to help you build that narrative and what to expect. So this idea here, even though we can't meet the overall idea of alternation as much as we would like, it still fits in the larger time frame in terms of the Elliott wave channeling technique and in time as well. Because of this 1, 2, it helps us kind of validate this idea that wave 4 is still working within a range, still working with the time kind of idea that we're creating a rather okay look, at least in terms of having the right look for an Elliott wave structure of a motive wave. Now, what about the other scenario that I talked about? We talked about the idea of also having a possible combination. Now, I think this still has the highest weight, as I have been mentioning, because if we take the origin of wave 1, 2, and the termination of wave 3, as long as we're trading below the median line, we can eventually become supported via the bottom of this channel, and then we can still assume a wave 5 being in the making. This is why I have been putting more emphasis on that possible combination idea. Although very rare, this idea would be a perfect ideal scenario, but again, nothing is perfect in this market and we don't know exactly what's going to be happening. So this 1, 2, 3, 4, 5, as long as we're in this channel, nothing to really worry about until major levels are broken, especially within this confluence zone of this small level here before the major breakout happened, before we came up to the 70K regions. So that's one idea. And again, the con to this scenario is that we don't have any alternation. We're assuming that this is just going to be based on the same amount of time or relatively the same amount of time, just as a combination idea. Now, this can develop into something else. We just don't know right now. It's too early to call. But for now, with what we have, still you're looking at the major overall expectation, and the overall expectation is to the upside. So that is why we're managing our expectations in terms of these scenarios. As much as I would like to be a bear, full-on bear, which the case does exist, what I'm going to go over in a moment, is that right now there's really nothing to worry about, especially with the healthy pullback of only a 20%. Even if we do another 30%, that's not uncommon within a bull market. So that's something to keep in mind for you bears, and thinking that you maybe have caught the top. Now, there is a possibility that you may have caught a top. How is that? Well, if we look at the bear scenario, again, we're reduced to a few different ideas. Again, I'm going to go over on how we can look at it on the shorter time frames in the next video. But for now, what we have here is a possible flat being made of the larger time frames. Again, we have some kind of three-wave structure, whether you're seeing this as an expanded flat of an idea or you're seeing this as a WXYZ, because those are the only two ways we can see for this mode of structure, for this idea of this B pocket. So the mode of structure has to be in the form of a corrective move for this wave A, and we're looking for a three-wave move for wave B. Now, wave B can be any corrective pattern as long as we're creating some kind of move to the upside in a three-wave fashion. Now, it can't be the triangle in itself. However, right now what we have here, we have a WXY. We have an alternative A wave B C instead of a 1, 2, 3, 4, 5. We can say that this is a wave W. Again, nothing to argue about this level here of a flat, that wave ABC as a sideways move. We're going to see this move here, and the only way we can fit that in is a possible ABC, where A to the C ratio is quite equal in length. This would complete our B wave top. Now, if we zoom in, again, I'm going to go this in more detail in the future video or tomorrow's video, where we can have a possible larger diagonal in play, where we're working for a three-wave here for the subwave 2, another ABC into this wave 3, 4, and then 5, and that will complete our larger diagonal. But either case, we're still looking for potential medium time frame upside into that 70K region before confirming anything, and at that point we can start talking about whether this wave 2 is in play, if this is deemed as a three-way move to the upside. So we still got plenty of time, ladies and gentlemen. This is why we don't want to be jumping the gun and saying that we're in the bearish scenario. However, on the macro time frame, it is becoming more and more validated. That is the key term here. It's become validated. Again, this idea still, although we are only above, in the 100 to the 110% range of a possible B pocket zone. The original B pocket zone that we want to be looking at is that 1382 or 1236 zone as our main idea for an expanded flat to kind of validate it as best as we can. That'll give us a little bit more probability that this move is going to be going down. But it gets harder to count the internal counts. But for now, as we can see this as a possible 3 type of move, whether as an expanded flat or some kind of WXY exit into a wave A, we can say that this is a WXY that's going to be leading us into that possible B wave top, where we don't even come back and retest the top of that 74K region that we printed earlier this year in March. So again, that diagonal idea of that 1-2 intermediate degree, we're looking for another 3, 4, 5. So this takes a lot of time, and it needs a lot of pressure from the bears to even create that possible wave 1. We need to break through a lot of supports and then retest support or resistances again, and then come back down to complete that 5-wave move. And again, we want to be working in that 5-wave move into that primary wave 1, and then this primary wave 2 pullback of the upside. That's when we can start confirming it, and that will take a long time, ladies and gentlemen. We're talking possibly months and months and months of data before we can even validate this idea as a probability. But the idea or the entertainment is still there, and I think this idea still is kind of the most highest weighted scenario. But again, we're working with probabilities here, so that is why we just want to keep this in the back of our mind. Now, what is another way we can do in order for us to get into that 1236 or 1382 zone, like I've mentioned? Well, the only way I can personally count it is this being replaced with that wave A, where we remain, where we keep that idea of that 5-wave wave action into that wave A. Same idea for that wave B, and then we would have to alternately label this as 1, 2, 3, 4. But again, if wave 4 does another longer sideways move, this idea becomes less likely as well, right? So what we have to do is we have to use that ABC diagonal idea of some sort, or even a possible double zigzag that has completed. I think that idea is still valid if we come up now. This would probably be the best scenario, where we'd be looking for that double zigzag of that WXY, where we originally said that idea is less likely because having a zigzag after a wave X hitting the 90% zone, it becomes less likely as a double zigzag, right? But the idea is still valid. So if we do move up even now as an impulse, you still have to be bullish on the medium or shorter time frame before we even come back into that 1238, 1236, 1382. So if you want to be a bear, you really have to want some fast, swift action to the upside to actually meet these expected levels before we get moved down in a sharp manner. So that would be the only way we can look at it, ladies and gentlemen. If you want to be a bear, you have to be short term, at least looking for some kind of confirmation to the upside, right? So this wave 4, 5 can put us into that. But for now, since it doesn't have the best look, because waves 1 and 3 is equal in length, rather, we are expecting, when you have the equal Fibonacci length based on the mode of wavelengths, wave 1 and 3, you're going to be expecting a wave 5 anyways. But this is the most rational idea anyways. So this would be removing a lot of the guidelines that's attached to these types of wavelength ideas, right? So again, this would be the best possible way or an outcome we would move to as a larger diagonal coming into play for this wave 1, 2, and that would complete this intermediate where we don't retest the top and then come down for the 3. But again, for the larger time frames, it does meet the expectation between the 101 to the 1382%. But again, ideally, you want to have a B pocket zone, and the only way to do that is via this possible scenario, right? So there's a lot of trade-offs in between, and that's why we need to manage expectations. To quickly summarize, like I have said, the idea of the diagonal idea is possibly the best way. Again, you can still be a bear, and I'm going to be switching to a bear once we get into price discovery, because we're expecting a larger pullback of some sort after this 5-wave move has completed. In fact, if anything else, this is a very good conclusion to this bull market. I'm very glad that we're actually starting to come to a conclusion of some sort. But again, we do have opportunities in between, and that is why we need to take this approach with utmost neutral as possible. So this wave 1-2 pullback is going to be determining everything, whether this is going to be that larger pullback of some sort, or we're going into a bear market, or this is just going to be a 1-2 pullback where we only come down to the 30 to the 40K regions and we're off again for the next bull run. So that's that scenario. And then we have the combo idea, which is more of the ideal scenario for me. Have that retest of that 70K region, come back down one more time, ideally as a zigzag for wave Y, give us another large kind of consolidation look to this, and that will be more appropriate to how this wave 1-2 is functioning. And again, this idea is very difficult to talk about what kind of alternations are in mind. We don't need to be focusing on it too much. So yep, those are the scenarios. Thank you very much, ladies and gentlemen. If you're not following me on social media at X, or formerly known as Twitter, or at XFirstGlobal, please do give me a follow, because all of my ideas, I do daily updates on there. If you're not following me, it's very important that you do, because I do update it very often on the daily. Also, if you want even more quicker updates, please do not hesitate to contact me with the link in the description below for the X-Force Global Discord membership. Thank you very much. I will see you guys in the next video with a shorter and medium time frame analysis, continuing that schedule with ideas and constant fluctuations within the market. Hopefully that was helpful. I'll see you guys in the next video. Thank you very much. Bye-bye.